This is Justin Pulitzer. This is my weekend video for the week ending January 25th, 2015. As usual, there's a lot of material to cover, so let's just dive right in. So we had a bit of a double top here. I had discussed in one of my videos that this action there was actually real and that this candle was some excess and after hours with algo driven, but for the time being, let's ignore that and let's just look at these tops. So the pattern has been in SPY for a while to make a slightly higher high and then have a bit of a correction, and this time was no different. So for the last couple of weeks, we've kind of been chopping. Here we made a slightly higher high, came up to a slightly lower low, and we're starting to form a bit of a down channel, and we bounced here kind of at equal lows, slightly lower, and a little bit ahead of these reference lows and ahead of the 200-day MA. And if you'll notice in my videos, I've been discussing for a while the market having a tendency for people to jump in and buy the dip and to buy ahead of really the key technical levels and making the reference lows less strong, not as firm of an anchor low, and that's why these rallies have kind of been failing a little bit and coming back down a little bit with less follow through. So let me dive into the levels and discuss what's important here. This being said, with the backdrop of the futures being down a bit after in the Sunday night session, I had seen them as low as down at 15 or what have you. We'll see if that holds. We did close a little bit into I wouldn't say panicky, but I would say profit taking a little bit on Friday, although we did hold the 50-day moving average on the close. And I would say a lot of the down move happened at the end with just people probably who had played intraday long for continuation who were disappointed, probably some people stepping on the gas short, and just some profit taking. Anyhow, so I've been discussing ranges in SPY, and we kind of have been floating between the upper distribution here, this kind of middle distribution, and like this middle to lower void. And I still think that the market, in terms of correction-wise, is still healthy as long as we're still over this 99.06, healthier still over 201.90, and with the highs in play as long as we can get back over that 205.38. You can see on Thursday we did, and we closed strong over there, although Friday we did close a little bit weaker, still within the context of this kind of uptrend over the 50-day moving average, and with a bit of an inside day, still kind of toward the highs of this this candle. This, you can see, was a bit of a lot of short covering as we took out these highs, and this came on the heels of some European QE. They had floated the 50 billion euros per month rumor, and then it wound up being a better than expected 60 billion. So that's what fueled the markets. We'll see, I think, early this week. We have a lot of earnings this week with some big names I'm going to discuss, and that's going to, I think, determine the tone of the next month or so. So anyhow, SPY I still think it did break the downtrend. It's, to me, kind of in this testing into this upper distribution, found some responsive sellers, you can see, and we're just kind of meandering. So I'll be looking over the high of day of this day. Over 206.26 to me would be a long. You can see here this high came just shy of this last one, so I think you really need to eclipse this for the momentum to carry the market higher. As long as we're contained in this bar, I think it's just going to be considered a range. You know, I always talk about Fed days being a range. I guess we'll say ECB days now are also range. So the low of that is 202.33. I think below there gets very squirrely with more downside action likely. If we were to take out these lows, I had thought we would go to the 200 MA. That to me would be pretty close to there. So if we broke there, I think we would easily, by the time we got there, the 200 MA would probably be in line. That would have to be right or right out in terms of, again, being a supportive low. I think it would be weakened considering we have now tested it twice. Any break of there, I think you come down to these 196s. And I actually think that would be taken out, and we could even come down as far as the 192s, which is actually a 61.8 Fibonacci level. I don't have the fibs drawn really in. They're in gray because I didn't want them to distract from this video because they're kind of I wouldn't say far out, but they're not what I wanted to focus on at the moment. Although be mindful, those are the levels I think that are key. These lows, then the 196s, and then the 192s I think will be very important. And of course this primary trend, although I doubt will be coming down this hard, this fast into 188s. If we would, that is an absolute screaming buy. I highly doubt that will happen this week though. So that's SPY. IWM. We are a little bit stronger in IWM. You can see I've been discussing this 117.37 level for the better part of a year since the summer, and I'm starting to sound like a broken record. But the longer this consolidation happens up here, I think the more of the excess of the past couple of years in IWM are worked off, and I think it sets up a little bit more bullishly. That said, we are kind of below this secondary trend line. We did not take out this high, similar in SPY. I really would like to see the IWM take out this 119.39 to make a higher swing high. But my opinion is, as long as we are over this bar's high, here you can see on Friday it was a bit of a doji, which was an inside day, and that closed a little bit higher than SPY did. So that to me looks a little bit more bullish, but this is a very choppy instrument. It could come down pretty quickly. But for my opinion, in terms of this this IWM, as long as this 115.91 and this as long as we can stay over that 115.91, I think it's kind of still healthy. Below there to me gets more iffy. Although you can see we have the confluence of moving averages which have held. But for this to have really extension for highs, you really do need to stay over the 117.37. And I think that anything over, again, the Fed day high of the 118.24 is a little bit more bullish. Below the 115.10 is a little bit more bearish. Qs, on the other hand, are a lot stronger. You can see we actually closed on Friday above the Fed day high. And over this swing high, so we are now coming and making a higher high, which bodes very well in terms of tech. I think a lot of this has been because of Apple. I'll discuss that in a little bit. But again, with the Fed day, as long as we're over the 104.14, I think bullish. Below the 101.64 is to me a little bit more bearish. Contained in here to me is just still, I'll just call it range. They just keep those downtrends for all of those indices in mind. You can see here we're well over the 50. So all these indexes are looking okay. The Qs of which are looking the best. Some of the causes for concern: TLT is staying stubbornly strong over the old all-time high of 132.22. You could see we bounced here. We bounced actually ahead of it and came back up. I had drawn in artificially a new tertiary channel. You can see we broke out of the secondary. Primary is a country mile away down below. I'm not even going to bother showing it for now. But I had said for a while back, actually up here, that it was looking bullish for the bond bulls, anything over 127.68. So now we have taken out that other high. This chop consolidation bodes well. It could just do something like ride the channel higher. I think the reason for this is the big funds are playing the interest rate differential between European bonds and our treasuries. Some of those bonds are with yields that are much lower than ours, and obviously that's lunacy because U.S. Treasury bonds are the strongest in the world and have the implicit backing of the Fed and the U.S. Treasury. So I think that that's what's happening here. I think that this is lunacy, of course, these very low interest rates, more so in the European bonds than here. I think this will all eventually end very badly. But for the time being, to pick tops is sort of a fool's errand. This consolidation to me is not one I would want to fade just yet. If you can crack this low, below this 132.22, you might have a bit of a play maybe to retest into these 127s. But to me, this is looking, not like something you want to fade so quickly. Let's take a look at GLD quickly. I had discussed this, that I thought we would come up to here and that there would be potentially some room to the primary downtrend. it looks like that's happening. Although you can see we're heading into this distribution. There's a lot of overhead supply, and that is what this has run into, and it's done it in a very steep fashion. I think if you're long, you probably want to like hold it for the 127s. This would be a great right or right out short. If it breaks, obviously it's going to continue higher. For me, the long would be if we could come back and retest the breakout. You can also see that's a volume distribution. I think a lot of people kind of miss this move in gold, and I think they would be very interested, close to the 119 level. This is 118.99, so that's what I'm watching in GLD. A buy if it comes down here for a right or right out, which would also coincide with the gap fill and the breakout. If gold continues up here, I'm looking for the right or right out short up here in 127s, and you can see that's also the beginning of another volume distribution. I had discussed last week in the video supplemental VXX that this could be transitioning from bearish to bullish. And I had said that anything above this bar here was a little bit more bullish. Anything below there was the high was more bullish. Anything into there was more bearish. I would say, we could retest the low of the range, and that is what's happening. So this is kind of like put up or shut up time here for the bears, because they now have this confluence of moving averages and volatility and channel low to be and reference lows to kind of step on the gas here with volatility. So if you're a VXX bull, I think you can play long with a 3088 reference as a 3083 reference low as a stop. Anything below there obviously takes you below channel and makes this more bearish to come back down into the 29s possibly. Excuse me. And maybe even a bit lower to retest down into the lows. But if you start seeing this tick up, it probably is going to coincide with the market being down. So this sort of this volume distribution here of this 34s is going to kind of be the put up or shut up. If the bears can rally it back up, if they can get back up there, I think it could potentially move up to the channel high, or we're going to come down here into the channel low. I would be cautious to see if this goes sideways for a little bit. It may want to do some more consolidation first, but that's my thinking on the VXX. Let's jump into Apple. I was sort of hoping, if I had my druthers, for this to have been down into earnings, preferably even filling the gap down here into close to like the 99-100 level, but that is not what happened. Apple has rallied. You can see we had a bit of a higher low here. I discussed it being along with a break of the downtrend. I still maintain that. Although, we are now multiple days up and you're coming into earnings, that to me always sets up for a tougher risk reward. I do think Apple is destined for higher. I think that there is a lot of, there will be some resistance up here into like the 115. So judging on what the futures are doing now, it's probably not going to happen. I was going to be saying if we gapped up into this area, although it is still very possible with Apple, you never know. It sometimes acts contrary to the market. I would be looking to take some profits up here, frankly, after these many days up, particularly if it happens ahead of earnings. The expected move on earnings is $5.30 as of now on the print, and $6.38 into the end of the week. So my bias, I've said that I think Apple is going to probably go higher, but if we do rally into the number, it's probably going to be a little less certain, and you probably want to take some profits there. If we wind up pulling back into the number, the next day or two, Monday and Tuesday before the print, then I think it sets up for a little bit of a better long if you're kind of late to the party. This 111.27 to me has been really key. That was this flash crash day low. I think anything within this bar is choppy because it's considered quote-unquote range in my book. So if we can break over this 119.25, I think we could see that full 1.618 fib extension up to close to 129. But obviously we're many points away from that. I do also think that if we came back down here, this area would probably not be as strong again, and we would come down to fill up the gap. And maybe that would coincide with a 200 MA at the time, and that, to me, would be the buy. So that's what I'm thinking with Apple. If it continues rallying ahead of the number, look to trim up some profits into the print. If we come down the next 2 days, look to maybe add a long for the number. Ambarella is one I've been discussing. Over 58 is more bullish. We are now below there. I said that it would put the channel low into play. I still think that that would be the buy here for a move back up. If that snaps, you know, we have we could fill up this this triangle here potentially to the low here of this 44.45. And if that gave, then it also coincides with the volume distribution. You can see it always, these things usually tie in. If that gave, I think we would come down into the primary trend, which is down in the 40s. So just be careful with Ambarella, right or right out down here. It may do something like jump ahead of time. You can see the 50-day moving average has been kind of the key support the last couple of times. Here we did trade a little bit below it, but basically held with the channel. So I would be thinking that this area in the you know, somewhere between 50 and 50, what is this exactly? 50.72-ish to 52.73, somewhere in there. This area should hold for a bounce. Anything below there, GTFO. So Amazon, they are going to report. This to me is a very choppy chart with no really edge in my opinion. You could see we came down and retested this 284s. We did it again here with a slightly lower low with a bit, I would still say that this is reference. Here we basically came down again, and the stock is now making a slightly higher high than the last one. Again, I don't love that it rallied ahead of the number. This to me is some short covering. If this 284 breaks, you really don't want to be involved with Amazon. I think that that stock would continue considerably lower, possibly even another $100 lower. I think it could easily make it to the 246s and then the 233s, which is potentially well, that's not. I shouldn't say $100 lower. I was looking on before this video. I had been looking on another time frame down to these 177s, but let's not discuss that now. I don't think that would be relevant in terms of this video. But if this 284 area snaps, look for 246s and 233s. Somewhere in there, to me, would set up as a buy for a bounce, but only for a bounce. The expected move on the stock is supposed to be like 2287 to 2511. So that's what you want to be looking for in the stock. I think if it is bad, you're going to obviously come down into those levels. If it's good, we will come back up and trade to this downtrend line. If that snaps, maybe we do wind up getting up higher and filling up the gap to 364s. If I had to say long or short, I think Bezos is going to try and pull a rabbit out of his hat. I would really like if this was down into the print, though. The earnings are on Thursday, so maybe we, if the market's weak, we get a little bit soft and kind of trade sideways and consolidate a bit. But that, to me, is how you play it. You know, you could play right or right out against these 284s. And if that breaks, you know, get out and look for those lower levels. If we do break this down, this other downtrend line, I do think we can come back up into these, into this downtrend line, maybe even extend higher. So that's Amazon. BABA is still a pretty young chart. I really could not tell you my bias on the earnings here, which way I think the stock is going to be. They report on Thursday also, so if the stock comes back down, then I think it'll probably set up for a long. If we rally up into the earnings, it's to me a little less certain. It is still in a downtrend. We did break this kind of secondary, but we're still in my opinion, the primary, and it really kind of didn't even get there. It started rolling over a little bit ahead of there. I was talking about a right or right out short. I still think that that's potential just for like some day trading. But we did, you know, again, rally a little bit ahead of the number. I would be interested if this thing came down on earnings somewhere between this 89.95 and 92.70 for a buy the dip kind of play down here as a bit of a longer term hold and to maybe sell some puts. But you know, like I said, they've only reported once. There's not enough background, in my opinion, to make the call. I think it's going to kind of be a bit of do the opposite. If the stock really rallies up, ramps up into the earnings, probably want to look to take some profit somewhere if it can get up to the 110s. If it comes down, then I think it's probably a buy for the number. CMG, real simple. As long as it's over 697.93, it's still a long. You can see it's consolidating. It's held this gap up. and the stock is looking pretty bullish. So just use that as your reference. If anything below there, I mean, you could see we did look a little bit below here, and then rallied back up. So you want to probably use this this level, the breakout level. So that's CMG. eBay reported this week. The numbers weren't that great. The stock immediately, if you were watching after hours, dumped down to 50, and then rallied in after hours once Carl Icahn disclosed he's getting some board seats and going to try and split up the company. 57s have been a resistance point. I had discussed taking some profits. I had been short a lot of puts here. I was sort of my not very happy camper initially after hours when I saw those 50s, but then once I saw that couldn't hold, I was a happy camper. This trade wound up working really well. I think eBay is destined for higher. I think that they have the news cycle at their back. I would be a buyer of a dips anywhere, in this between 55 and 52 area. I think is a buy the dip type of a scenario. I would do it by selling puts. If you could get down there, if you could sell anything between 52 and 50s, I think those will work out for you quite spectacularly. Facebook getting ready to report. This thing has been an absolute choppy. It's kind of been just all over the place, right? So it came down with multiple days down, a slight rally, came lower. A lot of people had thought that this broke kind of trends and stuff. It really has not. It's been in a channel since the earnings gap lows back in the from the big breakout quarter. So it has taken out, I would say, primary trend from that gap, which is it's been kind of fluttering on either side of there. It's below now. But as long as this channel holds, I think Facebook has the opportunity to go higher. I think that this stock is really destined to get to 100. I just don't know if we need to go lower first before getting there. We have rallied the last couple of days. Again, I hate when stocks do this. I would love to have, for this to have been the day of earning, like the day before earnings. This to me would be an obvious buy. But we are now rallying back up. In the interim, I think as long as we're over 76.88, the stock is kind of neutralizes a bit. Over 78.27 gets to me a little bit more bullish and probably puts these 79s and 80s in play. So I just really, again, want to see how this stock trades ahead of the number. If it's down, then I think it's a buy. If it's up a little bit, it's probably a little less certain. The expected move is $4.26 on the snap, and then to the end of the week, it's $4.91. So that's Wednesday. Again, let's I kind of am hoping it kind of comes down to set up for a long. If we continue rallying, it's a little less certain. Although a lot of these stocks like Starbucks and stuff have been rallying. Like they held strong here, consolidated, and then it gapped up after the earnings. So just because the stock has been up a couple of days doesn't necessarily mean it's going to get slammed when they report. So just keep that in mind. Gilead, no, we're not going to bother with Gilead. They're not reporting this week, and we're already running a little bit over on time. Let's do Google. Google, I had discussed this being relative strength here. I had discussed it being a long, and I had discussed to take some profits in 35s, and this to be a RORO short. It wasn't. It wound up just being a good long. Again, I don't love that it's rallying ahead of the numbers. I would have loved to have, kind of been down, close to the gap in that instance. I do think Google is sort of starting to break the pattern. You could see this to me is really the more important downtrend. It broke it and has held and consolidated a little bit on Friday again with relative strength. I do think that the stock is destined for higher. I think it could get up to like these 575s or whatever, 578s. But again, it's a harder chase. It was a much easier buy down here than it is, here in terms of trade location wise. Although, like I said, we have now made a higher high and broke the secondary downtrend. So for me, at least initially, the path of least resistance for the stock is probably a little bit higher. It's harder to chase here. If you're going to play Google long, do it smaller size. That is my thinking. If this thing does wind up falling apart and cracking on earnings, I had discussed in an earlier video that I would love to be a buyer in the down in like the 420s to like 450 area. I don't know, that's coincides with primary trend, and there's a gap fill down here. down at like 450. So let me see if I could find that for you quickly, since I'm already futzing around with the chart. I wasn't going to, but I will. You can see down here the around let's say just call it 450, and then even down to like these 420s. This to me would be an absolute screaming buy on primary trend with some type of a capitulation sell-off. Although my guess is that we're probably not going to see that now in Google. It's probably going to wind up going a little bit higher. Microsoft. This to me is has been a pretty bullish stock, right? It's been making higher highs and higher lows. We've just been in a bit of a sideways consolidation. So let's see. My thinking would be this is a buy above the kind of above the downtrend line. Microsoft, the expected move is supposed to be like $1.31 to on the snap, and then one thing backtracking with Google, the expected move is supposed to be like 24.45. So just know that I expect that to be conservative for the stock. It's probably going to make a bit of an outside move, in my opinion. Although Google tends to sometimes not react right away. It tends to wait until regular trading hours. But I think that this sucker is going to probably move a little bit more than expected this time. Anyhow, sorry about that. Back to Microsoft. The expected move, like I said, is $1.31 to $1.36. I would be a buyer over the over the downtrend, and then if it breaks here, if it winds up coming down on earnings, you probably want to buy it with against the 200-day moving average as your stop. Any violation of there, I think you're going to come back down and fill up the triangle down to 42s, and that was kind of like where this big breakout was. So that's my thinking with Microsoft. Buy over the downtrend for a play at the all-time highs, or a short below this downtrend in the 200 MA down to these lows. So that's Microsoft. I'm going to end it on Tesla, everyone's favorite stock. You either love it or hate it, right? You either love to hate it or hate to love it or whatever. This has been in a down channel. The crashing price of crude has not been helping this. And it's also kind of within a downtrend, within a down channel. So my thinking with Tesla is it's going to be a row trade down at 177s if we come down there. Or if you break this secondary downtrend line, you probably could play it up to 220, maybe even up to the down channel, maybe even down up to this reference high, which coincides with the channel, which is like 228, 230-ish area up here. So that's what I'd be looking for, either a buy down here or a break of the downtrend to a play for a move to the channel high. So that's it. With that said, let's have a good trading week. Be sure to follow me on Twitter. My handle is @JustinPulitzer. I also did a risk management video that is posted on the stream. If you have not seen that, please watch it. It is a masterpiece, if I do say so myself. No, in all seriousness, I think it covers a lot of how I think about stocks and risk, and a lot of the common mistakes that we, more of us like to admit make. So I will post that link within the description of this video. If you haven't seen it, please watch it. I will be on the stream. If you have any questions, just message me. Again, @JustinPulitzer. Cheers.